Hi, sir. Good afternoon.
Good afternoon. So let's start the first pure accounting based paper of ACCA, financial reporting. There are three papers relating to financial accounting in ACCA. One you have already studied, that it was financial accounting. That was basic of financial accounting. Now we are moving towards financial reporting, where we will learn some accounting standards and we will learn how to prepare accounts based on those accounting standards. And then you will move towards advanced level accounting paper, that will be SP. After studying these three papers, you will become expert in accountancy field. So we have learned basic here. Now we are moving towards some accounting standards. Some standards we will study here and some standards advanced level we will study here. And after that, you will become expert accountant. So let's discuss about this financial reporting paper. Financial reporting paper, we are having some chapters. How many chapters are there? There are 23 chapters that we need to cover in our syllabus. What are those chapters? We will discuss one by one. How the exam paper will look like. As any other exam of ACCA, this paper exam is also of 100 marks. And out of 100 marks, you need to achieve 50 passing marks. In exam paper, there will be three sections. Section A for 30 marks, section B for 30 marks, and section C for 40 marks. In section A, there will be 15 objective type question, mean MCQs of 2 marks each. And section A will cover the whole syllabus, all 26 or 23 chapters. In section B, you will face 3 10 marks question. 3 10 marks question, and each question will be divided into further 2 marks of further 2 parts of 5 marks each. But there will be 3 questions of 10 marks each. And each question will be having further 2 parts of 5 marks each. I mean, there will be some short calculation based question based on accounting standards and knowledge. I mean, in this question, examiner will test some accounting standard knowledge separately. And then in section 3, there will be 2 question of 20 marks each. And these will be longer questions based on preparation of financial statements. I mean, where we need to prepare financial statements, either of single company or either of group company, or there could be question of interpretation of financial statements. It could be a mixture question like first prepare financial statements and then interpret the results, mean ratio analysis. So out of 100 marks, we need to achieve 50% passing marks. And these passing marks are very easy to achieve if you are attending 100% classes and practicing your questions at. I mean, to pass this paper, what you need to do? Pass this paper, you need to attend 3 hours class every week. And you need to spend 6 hours homework every week. You need to spend at least 9 to 10 hours every week on this paper. And if you are spending 9 to 10 hours on weekly basis for this paper, you will be able to pass this paper easily. If you are not spending 9 to 10 hours every week on this paper, there will be difficulties. you will struggle during exam paper. So let's move straight forward toward the paper. 100 marks paper. And out of 100 marks, 85 marks will comprise calculation, numeric part. Only 15 marks relating to theory. An examiner will ask some theory topics in MCQs or in 10 marks questions. So 85% is numeric. Only 15% is theory. Let's start from the chapter 1. In chapter 1, we will revise our previous paper financial accounting. We will not learn anything new. We will just be revising our previous financial accounting paper because without having a good base, we cannot move forward in accounting. Introduction to published accounts. Introduction to published accounts. I mean, for every company, what they need to do, for every listed company, they need to prepare their financial statements. And what are the components of financial statements? We have discussed in financial accounting, there are 5 components of financial statements: statement of profit and loss and other comprehensive income, statement of financial position, and these 2 are the main components of financial statements. Other than this, what are the other components? Statement of changes in equity. 4th one, statement of cash flow. And 5th one, notes to the accounts. We have studied in financial accounting paper how to prepare statement of profit and loss and other comprehensive income. We have already learned how to prepare statement of financial position. We have learned how to prepare statement of changes in equity, and we have learned how to prepare statement of cash flow. But this was not part of financial accounting. This part we will learn here in this paper. How to prepare notes regarding what account balances we need to provide some notes in the financial statements. Notes mean disclosures. According to accounting standard, we need to disclose few things in the financial statements. What things we need to disclose, how we can disclose, how we can prepare notes, we will learn in this paper. So let's move forward. In this paper, we're gonna learn about accounting standards. This means you need to learn the number and name of accounting standard as well. And out of those accounting standards, the first accounting standard is IAS 1, and IAS 1 name is presentation of financial statement. I mean, this standard providing guidance about how to present the financial statements. First, we need to prepare profit and loss account. How we can prepare profit and loss account? First, we need to calculate gross profit. Then we need to deduct distribution and admin cost. We can arrive at profit from operations. Then we need to deduct finance cost, meaning interest. We will arrive at profit before tax. Then we need to deduct tax. We will arrive at profit after tax. Who has provided this format? This IAS 1. While preparing balance sheet, means statement of financial position, you need to show total assets first. Then you need to show equity and liabilities. Who has provided this format? This is standard IAS presentation of financial statement. So IAS 1 presentation of financial statements states that a complete set of financial statements comprise a statement of financial position, statement of profit and loss account and other comprehensive income, statement of changes in equity, statement of cash flow, and accounting policy and explanatory notes where company need to explain its accounting policy. Accounting policy mean if you are depreciating your asset on a straight line basis or reducing balance basis, you need to disclose here where in the notes to the accounts. How you have calculated the depreciation, what is the rate of the depreciation, you have to disclose where notes to the accounts. IAS 1 revised does not require the above titles to be used by companies. Company need to prepare these five parts of financial statements, five component financial statements, but some companies might be in previously using the word balance sheet instead of statement of financial position, using the word profit and loss account instead of a statement of profit and loss account. So companies can use those names. It is not necessary they need to use these names. If in previous year they are using the word balance sheet instead of statement of financial position, they can use that name. So it is likely in practice that many companies will continue to use the previous terms of balance sheet rather than statement of financial position, income statement instead of statement of profit and loss account, or cash flow statement rather than statement of cash flow. So companies can use their previous name for these components of financial statement. So let's discuss one small topic, exceptional item. Exceptional item means there are some account head about which you need to disclose something in the notes to the accounts. Who require those disclosure? Yes. So exceptional items is the name often given to material item. Material means big items, important items of income and expense of such size, nature, and incident that disclosure is necessary in order to explain the performance of the entity. There are some items of profit and loss account. Those are considered material, mean important. So you need to provide disclosure about them in the financial statement, where in notes to the accounts. So the accounting treatment is to include the item in the standard statement of profit and loss account and disclose the nature and amounts in the notes. What could be those items? Written down of inventory or net realizable value, mean as per accounting standard, we need to record inventory lower of cost and NRV. So you need to disclose in the financial statements notes to the accounts what is the cost and what is the net realizable value. Obviously, in financial statements, in balance sheet and profit and loss account, you are providing closing inventory figure only. But what was the cost? What were the NRV? How you have stated it on lower value, you need to disclose. You need to provide disclosure regarding impairment of assets, restructuring cost, gain losses on disposal of non-current assets, discontinued operation, litigation settlement, and reversal of provisions. Mean these are some exceptional items relating to profit and loss account about which we need to provide disclosures. So let's revise how to prepare statement of financial position. How to prepare statement of financial position. So first we need to put a heading statement of financial position for the year ended or as on that date, 31st December year end. And before statement of financial position heading, we need to put the company name. And in statement of financial position, we first state assets, and assets are of two types, non-current assets and current assets. Non-current assets that will provide us benefit in more than 12 months. Current assets that will provide benefit in less than 1 year, mean less than 12 months. That will remain in our business more than 12 months, that will be called non-current assets. That will be changing within 12 months, those will be called current assets. What could be the non-current assets? Property, plant and equipment. Property, plant and equipment include land and building, plant and machinery, motor vehicles, furniture and fixtures. Either you can show separate all four, or you can include all in property, plant and equipment. And for this figure, you can provide a notes, mean working, mean how this figure has been calculated, mean what are the assets including in this figure. And then if you have made any long-term investment in any of the business, that you will show here. Intangible assets, and there are two types of non-current assets: tangible, property, plant and equipment, and intangible like goodwill, patent, copyrights, we will mention under non-current assets. And then we will move towards current assets, inventories, closing inventory, trade receivables, cash and cash equivalent, asset held for sale mean if company going to sell its asset in coming year, you need to disclose in current assets, and you can include prepayments. So total assets, and this should be equal to total equity and liabilities. Means second part of statement of financial position is equity and liabilities. First, we need to state capital and reserve are equity, share capital, retained earning, other components of equity like share premium, revaluation surplus. Other component could be share premium, revaluation surplus. And then we need to state liabilities, non-current liabilities and current liabilities. Non-current liabilities are those liabilities that we need to settle in more than 12 months. Mean the repayment of amount will be based on more than 1 year. That will be recorded under non-current liabilities like long-term borrowing, bank loan, or deferred tax. Current liabilities that we need to pay within 1 year, within 12 months will be stated under current liabilities like trade payables, short-term borrowings, tax payable, short-term provisions, or you can say accruals, accrued expenses, expenses payable, like interest payable, rent payable that we haven't paid in the current year, we're gonna pay in next, so we will record under current liabilities. And this total of total equity and liabilities should be equal to total assets. And now we have moved towards financial reporting paper. This means all the calculation we need to conduct in Excel sheet. This means we need to practice in Excel sheet how to prepare these financial statements in Excel. Some students have attempted performance management, taxation papers, so they know how to use Excel sheets. But some students are coming from first three paper to financial reporting. So might be it will be their first paper where they need to answer in Excel sheets. So from today onward, we will learn how to prepare calculation in Excel sheet, mean how to prepare the statement of financial position in Excel sheet, how to prepare statement of profit and loss account in Excel sheet. We will practice 2, 3 questions in Excel sheet today, so that you can start practicing in Excel sheet now, so that during exam, you will not be suffering from your speed, typing speed using Excel sheet. So note that IAS 1 require an asset or liability to be classified as current if it will be settled within 12 months of the reporting date. Mean liability that need to be settled within 12 months should be classified as current liability, or it is a part of the entity's normal operating cycle. This will be operating cycle, normal operating cycle. Normal operating cycle of the business is 12 months, mean 1 year, because business prepare financial statements on yearly basis. So we assume normal operating cycle is 12 months. So liabilities that need to be settled within 12 months will be recorded under current liabilities. But sometimes company prepare financial statements either less than 12 months or more than 12 months. Suppose company is preparing 9 months financial statements. Our company is preparing 15 months financial statements. There could be some reasons. Company is not preparing financial statements for 12 months. They are preparing financial statements for less than 12 months or more than 12 months. If companies are preparing financial statements less than 1 year, like 9 months, the normal operating cycle will be 12 months. Mean we will consider normal operating cycle as of 12 months. But if company is preparing financial statements for more than 1 year, so the normal operating cycle will be according to the months. So normal operating cycle for a normal company who is preparing on yearly basis will be 12 months. But if company preparing financial statements less than 12 months, we will consider normal operating cycle as 12 months. In those liabilities that need to be settled within 12 months, we will record as current liabilities. Like there is a liability that company need to settle in 11 months. Company preparing financial statements for 9 months. Either this liability should be recorded as non-current as current. So we'll assume the normal operating cycle is 12 months, we will record as current. But if suppose company is preparing financial statements for 15 months, and there is a liability that we need to settle in 14 months. So we'll record that liability under current liability because now the normal operating cycle has extended to 15 months rather than 12 months. Can you understand this concept? Okay, statement of changes in equity mean how to prepare statement of changes in equity. This is the format to prepare statement of changes in equity. First, we need to mention the company name. We need to put the heading statement of changes in equity, and then we need to mention the year end for the year ended 31st December 20 something. There are 4 components of statement of changes in equity. One is called share capital. Other is called share premium. Other is called revaluation surplus. The 4th component is a retained earning. We need to prepare 4 columns. One for share capital, one for share premium, one for revaluation surplus, and one for retained earnings. And then we need to prepare the 5th column as total. And all these 4 components are part of equity. Share capital, share premium, revaluation surplus, and retained earnings. First, we need to state the opening balance. Balance at 31st December or at start of year mean opening balance we need to state for all. And that will be normally provided in the question. Opening balance for all. Then we need to adjust any prior year adjustment for IAS 8, and that we will study in IAS 8. In opening balance, we need to adjust any prior year adjustment for IAS 8, where that adjustment will be adjusted in retained earnings. It will be having impact on the previous year profit. Then, if company have issued any shares during the year, that will be recorded under share capital. And if there is any premium on share issue, that will be recorded under share premium account. Comprehensive income mean if there is any revaluation during the year. So revaluation gain or loss that we normally record in other comprehensive income, that we will record in statement of changes in equity, and where under revaluation surplus that will be adjusted. And if there is any transfer of retained earning, like if company is going to sell any of the revalued asset, all the amount in revaluation surplus should be transferred to retained earnings. Might be we have studied at financial accounting paper. And if you have revalued any of the asset and you are going to sell that asset, so the amount relating to revaluation in revaluation surplus, we transfer to where? To retained earning by revaluation surplus debit and retained earning credit. So regarding that adjustment, we need to provide here. And if suppose company have paid any dividend during the year, that will be deducted from retained earning. And then we need to find the closing balance of all four, that will be recorded under balance sheet, means statement of financial position. So opening balance, prior year adjustment, any dividend paid will be deducted from retained earning. Any share issue will be recorded under share capital, share premium. Any revaluation surplus, gain loss should be recorded under revaluation surplus. And then there will be closing balance that will be transferred to balance sheet under the head equity. These figures will be provided in the question, and regarding other figures, there will be some adjustments, mean additional information. And how to prepare statement of profit and loss account and other comprehensive income, we can prepare combine or we can prepare separate as well. If we are preparing combine under the same head statement of profit and loss, mean first we will calculate profit after tax and then we will put to the heading other comprehensive income and other comprehensive income and its total. If you are preparing separate, we need to put company name, statement of other comprehensive income, year end, and then this will be recorded separate. What is the format of statement of profit and loss account? First, we need to put the company name. Then we need to put the heading statement of profit and loss and other comprehensive income. And then we need to mention the year ended 31st December 2018. First, we will record revenue, sales revenue. And from sales revenue, we need to deduct the cost of sales. What is the formula to calculate cost of sales? Opening inventory plus purchases minus closing inventory and plus direct expenses if there are any, like depreciation relating to production, we will add. Carriage inward, we will add. Opening inventory plus purchases minus closing inventory plus direct expenses. Direct expenses mean expenses directly related to production. And sale minus cost of sale, we will arrive at gross profit. From gross profit, we need to deduct operating expenses. These two are called operating expenses. Distribution cost, that is relating to sales, delivery, and admin cost, that is relating to office admin staff. These are relating to sales. So by deducting operating expenses in distribution and admin cost, we will arrive at profit from operations. And from profit from operations, we need to deduct the finance cost, mean interest expense. And we need to add other income. Other income mean interest received, dividend received, rent received. Mean if suppose company have made any investment in any of the property, and from that property company is receiving any rent, that is other income. If company has made any investment in any of the bank saving account and company is receiving interest, that will be other income, interest received. If company have made investment in any other company and from that company they are receiving dividend, that will be other income. Means for the income of normal course of business where business is selling its inventory, that will be sales revenue. And business earning any income other than sale of inventory, that will be recorded under investment income in other income. And by adding investment income, deducting finance cost from profit from operations, we will arrive at profit before tax called PBT. And from profit before tax, we need to deduct income tax expense. We will arrive at profit for the year, or we can say that is profit after tax. from which company will pay dividend to its shareholders. And then after calculating profit for the year, we need to prepare other comprehensive income. In other comprehensive income, what we need to record gain or loss on revaluation. And if company has revalued its assets, if there is a gain, that will be positive. If there is a loss, that will be negative. And gain or loss on fair value through other comprehensive income like financial assets, that is not part of our syllabus, that we will learn in SBR paper, IFRS. And then what we need to do, total comprehensive income for the year. Like this, we can prepare statement of profit and loss and other comprehensive income combined. Or you can prepare both separate as well. Like first we have prepared statement of profit or loss. And then we have prepared statement of, a statement of other comprehensive income separate by taking this profit figure, then adding gain or loss on revaluation and total comprehensive income. So this is the format. We are already aware about this format. We have already studied this format in financial accounting paper, but we have revised. Might be you forgot about this. So we have revised. So let's move towards a question. This question we're gonna solve today in Excel sheet. I will show you how to prepare these statements in Excel sheet. So the following information has been extracted from the book of Piclet for the year to 31st March 20X9. Year end is 31st March 20X9. What you need to do? Prepare Piclet statement of profit or loss for the year to 31st March 20X9. A statement of financial position at that date. You need to prepare a statement of profit or loss and statement of financial position. What is the information? Admin expenses 170. Interest paid 5 expense. Finance cost. Called up share capital ordinary shares. This is share capital 200. Dividend paid. How you can recognize whether this is dividend received or paid? How you can recognize? In this column, you are having all the debit account balance figure, and in this column, you will be having credit account balance figures. And dividend paid is an expense having debit nature. Dividend received is an income having credit nature. If this dividend amount is in a debit column, what is that? Paid or income?
Paid.
Paid. Because income normally recorded in credit side. I mean, it's providing a trial balance to you. In trial balance, assets, expenses are recorded in debit column and income, liabilities, equities are recorded in credit column. So this is dividend paid. Cash at bank and cash in hand, current asset. Income tax remaining balance from previous year is 10. Mean expense. Along with the current year, we need to show this as expense. Warranty provision 90, liability. If company providing warranty to its customer, this means there are chances customer will claim warranty. So that means company need to create provision, liability. Distribution cost mean distribution expense. Land and building at cost. Out of this 210, 110 is the amount for land and 100 is the amount for building. And their accumulated depreciation is a 48. That is relating to land or building or both. That is relating to building part of it. Plant and machinery at cost 125. Accumulated depreciation. This amount retained earning. The year end is 31st March 20X9. This means this is opening retained earning. in which we need to adjust current year profit. If there is any dividend paid, we need to deduct, and then we will arrive at closing retained earning figure for the balance sheet. 10% loan note, long-term liability purchases, that will be part of cost of sales, inventory, opening inventory at 1st April 20x8 because the year end is 31st March 20x9. Cost of sale part, trade payables, trade receivables, current liability, current assets, and there are some adjustments. Inventory at 31st March 20x9 was value 250. This is closing inventory. That will be deducted from cost of sale as well as recorded as current assets in the balance sheet. Building and plant and machinery are depreciated on a straight line basis, assuming no residual value, and the building straight line basis rate is a 5%, plant and machinery 20%, mean against a building 100 amount, we need to provide depreciation of 5%. And what is a 5% of 100? That is a 5,000. And 20% on plant and machinery. Plant and machinery amount is what? Cost 125. So 125. And these figures are in 125,000. And 20% of 125,000. 20% of 125,000. I need calculator in your hand all the time during this FR class, please. Not mobile calculator that you can use in your exam paper. You cannot use mobile in your exam paper, please. Yeah. 25,000. There were no purchase or sale of non-current assets during the year, making life easy. Mean no addition, no disposal of assets. The depreciation charge for the year to 31st March 20x9 are to be apportioned as follows. And the depreciation figures where this will be charged, 60% of these figures will be charged to cost of sale. What's the total? 30,000. So 60% will be charged to cost of sale. 18,000. 20% to distribution cost. And 20% to admin cost. Income tax for the year. The tax for the year is 135,000 that we need to record as a liability in current liabilities, tax payable as well as income tax for the year. And the 10% loan were issued on 1st April 20x7 and is repayable 5 years from the to date. Mean the loan amount will be recorded as non-current liabilities long-term loan. The year-end warranty provision for warranty claims has been estimated at 75,000. Warranty costs are charged to admin expenses. How much warranty we have find here? 90. Mean company created provision for 90. But for the year, warranty claims were 75. This means in balance sheet, we need to provide warranty provision for 75. And the 15 extra warranty created, we need to deduct from the expenses. From which expenses? Admin expenses. This means we need to deduct 15 from admin expenses. Can you understand this? And there is admin expenses figure in which we need to add the depreciation and we need to deduct this 50. So this is the data. Let's move towards preparing financial statements using Excel. So here I'm gonna open Excel sheet for you. Okay, so this is Excel sheet. We need to prepare a statement of profit and loss account. We need to prepare a statement of financial position. So let's put a heading statement of profit or loss and other comprehensive income for the year ended 31st March 20x9. Is it fine? Now we need to prepare statement of profit and loss account. So put here particulars. And by leaving 2, 3 column, you can put amount. And then we can put calculation. If we want to show, we can show calculation separate. And we are using figures in what? Figures in dollar or pound? In dollar. So we can put here the sign of dollar. Okay, and this we start statement of profit and loss account from sales revenue. Then we need to deduct cost of sales, and we will arrive at gross profit by leaving a line. And from gross profit, we need to deduct what? Distribution cost. Then we need to deduct what? Administration cost. We will arrive at profit from
Operating expenses.
operations. And then we need to deduct what? Finance cost. We need to add other income. We'll arrive at profit before tax. We need to deduct income tax, and we will arrive at profit after tax or profit for the year. And this question, he didn't ask for preparing other comprehensive income, even there is no information relating to revaluation or something. So what we can do, we can bold this. How we can bold this? Put a cursor here or click over here, and then you can either bold from here or simply press Control B, bold. For the year, Control B, bold. And we can even bold this as well. Okay, now move towards the format of statement of financial position. So company name, statement of financial position as at 31st March 20x9. And then here we go. We are moving towards preparing this, and we can copy paste this as well. Control C, copy, and then put it here Control V, paste. Control C, copy, Control V, paste after select. Okay. Assets first. In assets, first we need to record what? Non-current assets. In non-current assets, we need to record what? Property, plant, and equipment. For property, plant, and equipment, we can prepare some working notes. From that note, we can put only one figure here. No need to mention all the property, plant, equipment, and I'm building plant, I'm changing motor vehicle. We can prepare notes. And then we will move towards current assets. And current assets, we cannot make working note. We need to provide all the current assets figures here. And then we can put what? Total assets. And then we can move towards equity and liabilities. Equity and liabilities, first we need to record equity. Equity components like a share capital. In this question, we have seen there is no other component except retained earnings. And then we will move towards non-current liabilities. After leaving 2-3 lines, we can move towards current liabilities. And then after leaving 3-4 lines, we can calculate total equity and liabilities. So we can put this as bold. We can put this asset heading as bold. We can put this non-current assets heading as bold. We can put this current asset heading as bold. Total assets as bold. Equity and liabilities as bold. Equity heading as bold. Non-current liabilities bold. Current liabilities heading bold, and total equity and liabilities bold. So this is the format we have prepared. Now let's move towards the question and see how we can solve this question. So let's move towards the question. I'm moving from adjustment first. So in adjustment, closing inventory is 250,000. Closing inventory is 250,000. Where it should be stated? It should be stated under current assets. So closing inventory are simply inventory. How much is the amount? 250,000. I'm putting complete amount rather than figures in thousands. And this closing inventory should be part of cost of sale. And in cost of sale, we can show working sum here. How to show working? How to show working? Put a bracket here. Suppose opening inventory is 0 plus purchases is 0 minus closing inventory is what? 250,000. Bracket close. We will look at opening inventory, purchases, and we'll put, and then we can calculate. So adjustment 1 done. Done. Now moving towards adjustment 2 relating to depreciation. And this is relating to fixed assets, non-current assets that are land and building and plant and machinery here. For this, we can prepare notes. Where? Under here. Working notes. Number 1. And that is relating to what? Property, plant, and equipment. You can simply put PP. So there are some assets, there is depreciation. What we need to do, we need to put some headings here. Here we will record the asset name. By leaving 2 lines, we will record its opening balance or cost. Then we need to record any addition like purchase during the year, if there is any. Then we need to record the sales during the year, like if there is any disposal. And we can calculate its closing figure. In cost, opening balance, purchases, sales, closing balance. And then we need to record depreciation. First, accumulated depreciation. Then we need to record depreciation for year. Depreciation for year. Then we need to calculate total depreciation. And then closing balance of assets minus total of depreciation, we will calculate written down value. Now value. Okay, so see how we can calculate. The asset name, we are having 3 types of assets or 2 types of asset. How many assets we are having? 3 types of asset. Land, we will separate. Building, we will make it separate. And plant and machinery will make separate. Plant and machinery. If it is going here, you can simply put plant and machinery P and M like this. Okay, the cost of land is what? The cost of land is what? 110,000. Is there any purchase? No. Is there any sale? No. Is there any accumulated depreciation? No. Is there any depreciation for the year? No. Done. Regarding building, what is the cost? 100,000. Put a complete figure, 100,000. Is there any purchase? No. Is there any sale? No. Is there any cumulative depreciation regarding building? Yes. How much is that? 48. What is the depreciation for the year for building? This is 48 or 48,000. Please make sure. We are not calculating figures in thousand. Is there any depreciation for the year? Yes. How much is that? 5,000. So put 5,000 here. Now moving towards plant and machinery. What is the cost of plant and machinery? It's 125,000. Is there any purchase? No. Is there any sale? No. Is there any accumulated depreciation? Yes, 75,000. And what is the depreciation for the year? It's 25,000. Is that fine? Is that fine? Okay. What we need to do now? We need to calculate the values. How to calculate these values? Here put a heading total. We need to calculate cost total. How? Equal to sign. Put SUM sum. Bracket start. Move cursor here. Shift onward at the top. And then enter. The calculation done. And for these column calculation total, what you need to do, just put a cursor here, put Control C, Shift, move towards until there where you need to calculate totals, put Control V. The formula will be automatically be copied onward. Can you understand this? Can you understand this?
Yes, sir.
Is it fine? Okay. Now we need to calculate written down value. How we can calculate written down value? First, we need to calculate this closing balance of the assets. This closing balance, how closing balance is calculated? Cost add purchases minus sales. Cost plus purchases minus sales. So put a cursor here, put equal to sign. Then select this column, put add sign, purchases, put minus sign, this sales, and put enter. Is done. And the same formula we need to calculate onward. So Control C mean copy the formula, Shift and put it down and Control V, automatically the values will be calculated. Now we need to calculate total depreciation. How? By adding both of these figures. Put equal to sign, this column, put add, this column, enter. And now this formula, Control C, Shift downwards, put Control V. 48 plus 553, 75 plus 25, 100,000. And these two total, this one. Now we need to calculate written down value. How we can calculate written down value? Asset closing balance minus total depreciation. So put equal to sign, this closing balance, put a minus sign, and this total depreciation, put enter. And now this formula we need to calculate here and here as well. How to copy that formula go below? Just click on this, Control C, Shift downward, Control V. That is done. So this 182,000 will go where? Property, plant and equipment under non-current assets. We can put this a little bit bold. So this 182,000 figure we can put where? Under property, plant and equipment, 182,000. And we can put here working note 1. Bracket. From where this figure is coming? From working note 1, where the working note 1 are in our answer. I mean, we need to show this working. Can you understand how we have calculated this? I mean, this is the asset cost account, this is accumulated depreciation account, and cost closing minus depreciation closing, we can calculate written down values. Is it fine? Is that fine? Let's move forward. So adjustment 1, adjustment 2, we have done. Let's move towards adjustment 3. There were no purchases or sales of non-current assets during the year. Okay, we have put it 000. No issue with that. If there is no purchases or sales, we have calculated accordingly. No issue with that. The depreciation charge. Now we need to charge depreciation 60% to cost of sale, 20% to admin, and 20% to distribution expenses. This means the depreciation we have calculated 30,000. So 60% should be charged to where cost of sale. So this was cost of sale. This means we can say we need to add here what 60% mean 18,000. And in distribution cost, whatever will be the distribution cost, we need to add how much? 6,000. And 6,000 should be added to here. Admin cost, so 0. What will be the amount of admin? We will need to add 6,000 here as. So adjustment 1, 2, 3, 4 done. Is that? Adjustment 5. Income tax for the year to 31st March are estimated to be 135,000. This means income tax amount is what? 135,000. That should be recorded as a tax payable in current liabilities as well. So tax payable, that will be amount column is 135,000. Done. The 10% loan note was issued on 1st April 20x7 and is repayable the 5 years from that date. Mean that is long term. And the year-end provision for warranty claim has been estimated at 75. Warranty costs are charged to admin expenses. This means out of this 90 warranty, 75 should be recorded as warranty here under non-current liabilities. Instead of 90, 75,000 should be recorded here, and 15,000 that was overcharge should be deducted from admin expenses. So where admin expenses here? So this means from this amount we need to deduct 15,000 as well. Is it fine? So all adjustment we have done. Now we can move towards trial balance and we can prepare accordingly one by one. So admin expenses 170,000. Where is admin expenses here? Here. 170,000 is the total amount. Out of this, we need to add 6 and minus 15,000 to put equal to 170,000 is the amount. We need to add what 6,000 in that relating to depreciation, and we need to deduct what the overcharged for put equal. The figure is calculated. This means we have done with this figure. Interest paid is of 5,000. Where is interest paid? Interest paid, where is interest paid? Finance cost, that is what? 5,000. Done. What is the amount of the loan? What is the amount of the loan? 8,000, 80,000. And 10% mean the interest rate is 10%. When you have obtained this loan 2 years back, what could be the interest amount for the year? If 80,000 is the total loan and 10%, the total amount is 8,000. How much interest you have shown here as expense? 5,000. This means total for the year is 8,000. You have paid 5,000. The remaining 3,000 is what interest payable. This means this figure should be 8,000 expense for the year. And the remaining 3,000 that you haven't paid should be recorded as current liability. How much? 3,000. Is that? So interest done. Share capital is 200,000. Done. Dividend paid 6. And we need to adjust with the opening retained earning. We need to add profit and then dividend paid. We need to calculate closing retained earning. So for this, we need to prepare some working. So here we go working note 1. Working note 2, sorry. And we are going to prepare what? Retained earning. So what we need to do, opening, add profit, less dividend, we can calculate closing. What is the opening figure? What is the opening retained earning? That is 270. So 270,000. What is the profit? We haven't calculated yet. Put a 0 here for the time being. What is the dividend paid? The dividend paid is 6,000. So put 6,000. And we need to calculate the closing figure. How we can calculate closing figure? Put equal to sign. This, add profit minus dividend, enter. After calculating profit, we will put here, that figure will automatically be adjusted. Is that fine? Okay. So dividend we have recorded. Done with dividend. Next, cash at bank and in hand 9,000. Where? Current assets. Cash in bank and in hand 9,000. Done. The previous year income tax was 10. For the current year, the income tax is 135. Instead of 135, this should be what? 145,000. The current year figure will be recorded as tax payable 135, but the tax expense will be 145. Done. Provision we have done, and distribution cost are of 240,000. Where's distribution cost? This. So 240,000 equal to 240,000, in which we need to add how much? 6,000. So plus 6,000 and 246,000. So this is also done. And regarding these figures, we have already done. And 10% loan note 80,000. So this should be recorded under non-current liabilities. 10% loan notes 80,000 done. Purchases are of 470. So here is there opening inventory available? Yes, opening inventory also available. So we can put equal to sign. So opening inventory is what? Opening inventory is 150,000. Add purchases are of 470,000. And we need to deduct what? 250,000, that is relating to closing inventory. And we need to add what? Depreciation, how much? 18,000. So put enter. That will automatically be calculated. So we have done with purchases, we have done with opening inventory. Sales figure is 1,300,000. So put sales revenue 1,300, 1, 2, 3,000. What else we left? Trade payables of 60 and trade receivables of 728. Trade payables 60,000 and trade receivables under current assets. How much trade receivables? 728,000. So we have done. Let's move here. Sales, cost of sales is equal to GP. How to calculate GP? Equal to sign this figure minus cost of sale, this figure, enter, we will arrive at GP. And this GP, we need to calculate a profit from operations. How? Equal to sign GP minus distribution cost minus admin cost, enter. There is no other comprehensive income. So profit before tax, we can calculate how? Profit from equal to sign profit from operations minus this, enter. And then profit for the year equal to sign this minus this, enter. We have calculated 352,000 profit for the year. And this 352,000 should be added here. 352,000. This means this retained earning closing figure is a 616,000. 616,000. So 616,000. And we have found this from working note number 2. Is that? Okay, so profit we have calculated. Now we can move towards these figures. So this total equal to sum bracket start from here till here bracket enter total found, and this total is equal to sum bracket start from here shift to the top enter and 1169 balance sheet tally. Now we can put some like this GP figure, we can put to control B bold This profit from operation we can put to bold. I mean, a little bit much better presentation. Bold. Profit for the year figure will be bold. This should be bold. And this should be bold. Oh, sorry. Control Z, Control V. So how to perform calculation in Excel sheet? You need to start practicing this from today onward. These are our working. So we can put these as bold. Is it fine? Let's take a break for 20 minutes. After 20 minutes, we will practice some more questions. We are moving on break. Everybody there?
Yes, sir.
Yes. Okay, let's move toward another question. Three. Okay. Well. Test your understanding one. Before moving to test your understanding one, let's discuss a small topic relating to not-for-profit and public sector organization. There are different types of organization. One is called business organization and other is called NFPOs, not-for-profit organizations. Business organizations mean those organizations whose main purpose is to generate profit. And normally private organizations are called business organization. But an NFPOs, not-for-profit organization whose main objective is not to generate profit. Their objective is other than profit, like providing some kind of services to the community. And the government organization, also called public sector organizations, are normally not-for-profit organization. So profit oriented means business organization financial aim is to make profit, while for not for profit or government mean public sector, the financial aim is to achieve a value for money. Mean whatever money they are spending, they need to provide a benefit against that money, mean providing services to the community, not for making profit. Business organization directors are accountable to shareholders because who are the owner of business organization? Shareholders. While for not-for-profit organization, who are the owners? The government, the public who is funding these organizations through their taxation amount, or the donors who are providing donation to run these not-for-profit organizations. I mean, business organizations are accountable towards the shareholder, answerable regarding their success or failure towards the shareholder, while for not-for-profit organizations are accountable, answerable towards their donors, towards their trustees, towards government, as well as general public. Business organization obtain external finance like loan, or they can get money through capital mean issuing shares, while NFPOs get money from donations or government funds, mean government budget, government subsidies. So let's move towards another question, test your understanding one. The following trial balance has been extracted from the books of Arun as at 31st March 20x7. Year end 31st March 20x7. What we need to do, we need to prepare statement of profit or loss and other comprehensive income. Not only statement of profit or loss, statement of profit or loss and other comprehensive income, statement of changes in equity, and statement of financial position. In previous question, we have prepared statement of profit or loss and statement of financial position. But here we need to prepare statement of profit or loss and other comprehensive income, statement of changes in equity, and statement of financial position. See what's the data is given. Admin expenses, distribution cost, share capital, share premium, and these are the opening balances. Revaluation surplus, this is the opening balance of revaluation surplus that will go into statement of changes in equity. Dividend paid during the year, that will be adjusted to retained earning. Cash at bank, current assets, receivables, interest paid, expense, dividend received 15, other income, interest received 1, other income, land and building. Out of this 480, 380 is the land, 100 is the building. Land and building accumulated depreciation, plant and machinery, total depreciation, retained earning, opening balance, purchase, sales, inventory, opening balance, opening inventory, trade payables, bank loan. And we are having some adjustments. Let's discuss these adjustments. Inventory at 31st March 2027 were valued at a cost of 95,000. So closing inventory cost is 95,000. Included in this balance were goods that had a cost of 15,000. Meaning this 95,000, there are some goods of 15,000. These goods had become damaged during the year, and it is considered that the goods could be sold for 5,500 less commission of 500. In this 95,000, there are some goods of 15,000. This means this 95,000 comprises two elements. That is 80,000 plus 15,000. And this 15,000 is the cost. But their NRV, net realizable value, is 5,500. Selling price less cost to sell 500. So NRV is what? The cost is 15,000. What is NRV? 5,000. How? 5,500 minus 5. And for IAS2, inventory should be recorded lower of cost and NRV. So whether this 15,000 should be recorded on 15,000 or on 5,000. 5,000 instead of this, it should be recorded on 5,000. So by adding these together, closing inventory figure will be 85,000 rather than 95,000. Can you understand this? I mean, this should be deducted from cost of sale, and this should be recorded as current assets in the statement of financial position. 85,000 rather than 95,000. Depreciation for the year to 31st March is to be charged against cost of sale. All depreciation should be part of cost of sale. Building 5% on a straight line basis. What is the amount of a building here? 100,000. So what's the depreciation of building? That will be 5,000. And plant and machinery 30% on carrying amount, reducing balance basis. Reducing balance. This is the cost. This is the cumulative depreciation. So 400 minus 170 is equal to 230. So what is 30% of 230? 69,000. And both all together will be 74,000 should be charged to cost of sale as direct expense. Land is to be revalued upward by 100,000. Land value should be updated by 100,000. This will be recorded as gain on revaluation in other comprehensive income, and this 100,000 should be added to the land. Can you understand this? Income tax 165 for the current year, and bank loan is for 5 years, mean long term. So let's move towards preparing statement of profit and loss and other comprehensive income, statement of financial position, statement of changes in equity. If I use this format, Like if we omit these figures, or these figures should be same. Yes. I'm using the previous format here. And this we need to prepare it again. So I am removing this. Okay, let's discuss. So now we need to prepare statement of changes in equity as well. So prepare format for statement of changes in equity. Company name. Statement of changes in equity for the year ended 31st March 20x7. When here as well, make it 20x7 instead of 9. Okay, so statement of changes in equity format. First, we need to record what particulars. Where some column one for share capital, other column for share premium, other column for revaluation surplus, next column for retained earnings, next column for and we need to record their opening balance. We know there are opening balances. There is dividend paid as well. There will be some profit for the year that we need to adjust in retained earning. And there is a revaluation surplus as well. And then there will be closing balance. So this is the format for statement of changes in equity. Is that fine? So let's move towards solving this question. Okay. So first adjustments. Inventory closing figure, we have calculated how much. We have calculated 85,000. So put closing inventory here. We're under current assets as well as cost of sales. So cost of sale will be 0 plus 0 minus what? 85,000. And those current assets will be 85,000. This, just give me a minute here. E5G, C5G, 2G. Okay. So closing inventory we have done. Depreciation, we need to prepare note, working note 1. So let's move towards working note 1. That is relating to PPE. So asset name. We need the opening balance. Say cost, any addition, any disposal, and there is a revaluation as well. And then we can calculate what? Closing or accumulated depreciation. Depreciation for the year. Total depreciation. And we need to calculate written down value. WDP. Okay. So we're having 3 types of asset: land, building, plant and machinery. Okay, G, the land cost. What's the land cost is 380. So land cost is 380,000 and there's a revaluation surplus in land. How much is that? That is 100,000. So revaluation is 100,000. The building cost is what? The building cost is 100,000. There is no addition regarding land or building. There is no disposal of any one of the asset. And depreciation for building is 30 given in the question, accumulated depreciation. Building 30 is given in the question, and what for the current year? For the current year, we have calculated how much? How much we have calculated? 5,000. This is not 30, this is 30,000. Okay. For plant and machinery, we have the amount here as 400,000. Its cumulative depreciation is 170,000. And depreciation for the year, we have calculated how much? 69,000. That's it. So now we need to calculate the totals. Closing figure equal to sign this cost plus addition minus disposal plus revaluation surplus equal to. And this formula we need to put down. So Control C, Shift Control V. There is no revaluation for this. Is that? And for accumulated depreciation, we need to calculate total depreciation. So there is no depreciation relating to land, and equal to this plus this, enter, and this formula Control C, shift downward, Control V, and WDV equal to this closing minus this total depreciation, enter, and this formula should be formula Control C, shift downward, Control V, and we have calculated these amounts. Now we need to see the total for these. So total. So equal to some bracket. This shift, enter. This formula Control C, we can shift onward towards WDV, Control V. So what's the value? It's a 706,000 total for WDV for property, plant and equipment, 706,000. So we can put straightaway into the balance sheet under non-current assets, property, plant and equipment, 706,000. The 706,000, am I right? Yes. Okay. So we have done with the 1, 2, 3, 4, and income tax 165,000. We need to put as a tax payable 165,000 relating to current year. We need to record as income tax in 165,000. Done? Okay, now moving towards our trial balance figures. So admin expenses 250,000. Where is admin expenses? 250,000. There is no adjustment in admin expenses. Distribution cost 295,000. There is no adjustment in distribution cost. What else we are having? So admin done, distribution done, share capital of 270,000 opening balance. So share capital opening balance of 70,000. Share premium 80,000. Revaluation surplus 20,000. Dividend paid is of 27,000. So dividend paid will be deducted from retained earning. How much is that? 27,000. Cash at bank is an asset. Current asset, cash in bank and cash in hand 3,000. So these done. Receivables of 233,000. 33,000. Interest paid is of 25,000. As the amount of loan is 100,000. What's the interest rate? We don't know. This means 25,000 interest paid should be recorded. 25,000. And then we are having dividend received plus interest received. Altogether, other income is 16,000. Dividend received and interest received. So 16,000 is other income. Now we have calculated this. This means we need to add this as well in the formula. This means plus this other income. Then add this. Yes, this is F14 minus F16 plus F17. Yeah, that's fine. Okay, then land and building we have done with that. Retained earning opening balance is a 235,000. 235,000 retained earning opening balance. 235,000. This is also done. And purchases 1260. Opening inventory 140. Purchases 1260. Opening inventory 140. So cost of sale amount is equal to 140,000 plus 1260,000 minus 85,000. And we need to add what depreciation. Where is the total depreciation for the year? Not a total for the year. And for the year is 74,000. So we need to add 74,000 and then enter. This is our cost of sale. Now we have calculated 140,000 is opening inventory. 1260,000 is purchases, 85,000 is closing inventory, and 74,000 depreciation for the year. And then we are having a sales amount 2165,000. 2165,000. And then we are having a trade payables of 27,000. Trade payables of 27,000. And then we are having 100,000 bank loan instead of 10% loan note. Bank loan of 100,000. And there is no warranty. So now we need to calculate the profit. I think it's already calculated automatically. Yes, done with everything. So profit figure is 57,000. That we need to add here. Profit for the year 57,000. And he has asked to prepare statement profit or loss and other comprehensive income. Statement profit and loss and other comprehensive income. So I'm moving this data from here to down a little bit. Control X. So we can put somewhere here. Control V. Cut, paste. Okay. Now this is the profit. We need to prepare other comprehensive income as well. Other comprehensive income, we are having what? Revaluation surplus. Of 100,000. So we can calculate total comprehensive income. And this total should be equal to this profit figure plus this figure and enter. And this should be bold as well. This heading should be bold as well. So now moving towards, before preparing balance sheet, we need to prepare statement of changes in equity first. How we can prepare statement of changes in equity first. So this total should be equal to this plus this plus this plus this. Enter. And this formula control C should be down. Fill that. Control V. Okay. Now share capital, there is no change. So what we need to do? Straightway this will be there to 70,000. There is no change in share premium, so 80,000 will be there as well. In revaluation surplus, there is a revaluation surplus of 100,000. This means these should be added together. This plus this, enter. And for this retained earning, the total figure will be equal to this opening balance minus this dividend paid and adding profit for the year and this. So these closing balances we need to put in statement of financial position. 270, 80,000. So here under equity, share capital will be 270. And there is a share premium as well, while retained earning total is what? 265,000. This is not from working to now. And we are having share premium as well. And we are having a revaluation surplus as well. Well, share premium, we are having 80,000. And valuation surplus, we are having 120,000. And now see our balance sheet automatically tally 10, 27,000, 10, 27,000. And we have done with question. This is statement of profit and loss and other comprehensive income. This is statement of financial position, total assets, equity and liabilities. And this is our statement of changes in equity. In these figures, we need to put in balance sheet under equity share capital, share premium, revaluation surplus, and retained earning. So this dividend paid will be deducted. Revaluation surplus will be added to revaluation reserve. And this is our working. We can put it board. Is that fine?
Let's see financial position one more time.
Yeah, sure. Equity and liabilities part.
Yeah.
This is a basic question. These are the basic question. We are revising financial accounting previous paper. This is not relating to financial reporting. We are just revising previous topic today. These are the basic questions. In this paper, you will see a bigger question with so many standard adjustments, and those standard we will study later on. And in exam paper, you will face a question on preparing financial statements. So let's move towards test your understanding too. Okay. The following trial balance relate to P at 31st March 20x1. What you need to do, prepare in a suitable form for publication the statement of profit or loss and other comprehensive income, statement of financial position, and statement of changes in equity. Mean again, these three you need to prepare. Revenue figure is there, cost of sale is there, cost of sale total is there now. You don't need to calculate. Dividend received, other income, admin expenses, distribution cost, interest paid, finance cost, prepayments, current assets, prepayments, dividend paid that will be used in statement of changes in equity will be deducted from retained earning. Property, plant and equipment, complete figure is given. Short-term investment will be recorded under current assets. Long-term investment, non-current assets, short-term, current assets. Inventory at 31st March mean this is opening inventory, not closing inventory, because year end is 31st March, so closing inventory figure is given here current assets because cost of sale is already calculated. And trade receivables, current assets, cash and cash equivalent, current assets, trade payables, current liabilities, long-term loans, 1200, long-term liabilities, share capital opening balance, share premium opening balance, and retained earning opening balance. There is no revaluation surplus. And there are two adjustments only. The tax charge for the year has been estimated for 70,000. Tax figure is 470. And director declare a final dividend of 270 on 3rd April 20x1. What's the year end? 31st March 20x1. They declare dividend of 270,000 after year end. And dividend declare we don't need to account for. Dividend paid we need to account for. And this dividend is declared after the year end will be having no impact on our financial statements. So we need to ignore this. Let's move towards preparing financial statements. So I'm using the same data or same format. So sales revenue figure is not there. Cost of sale figure is not there. Distribution cost I have deleted. Admin cost I am going to delete. This I am going to delete. And for revaluation surplus, I'm going to delete. I'm going to delete this, 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 delete this. In fact, there is no revaluation surplus, so delete this, delete this, delete this, delete this. And deleting this, 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 this. Even we don't need to prepare working for this question because property, plant and equipment value is already given in the question. No need to prepare working. Okay, first adjustments. Tax for the year is 470,000. Here we need to put tax, income tax, 470,000. And we need to record as tax payable in current liabilities. How much? 470,000. Is it fine? Dividend declared, ignorable things. So done with the adjustments. Now look at the data that we have given. Okay. So sales revenue 5,300,000. 5,300, 123,000. Cost of sale is given 1,350 and then 123,000. Okay, distribution cost is given in the question. Okay, let's see one by one. This we have done. Dividend received to 10,000, other income. Other income to 10,000. 1, 2, 3. Done. Admin cost 490. Distribution cost 370,000. Done. Interest paid 190,000. Finance cost 190, 1, 2, 3. Okay, prepayments 25, current assets. Current assets, prepayments. How much is that? 25,000. We've done this. And then dividend paid 390,000. Where statement of changes in equity? 390,000 dividend paid. Dividend paid is 390,000. Done. Property, plant and equipment 4250 already given in the question. 4250, 4250. There is no need for note. 4250, 4250, 1230 thousands. Okay, short-term investment is there. So we can put short-term investment here. How much is that? 2,700,000. 1, 2, 3. What else? 2,700,000 is done. Inventory, closing inventory 114,000. 114, 123,000. Okay, what else is there?
Cash and cash equivalents.
Trade receivables 418,000. 418,123,000. Cash and cash equivalent 12,000. Make sure use the term that are used in the question, cash and cash equivalent. Okay, done this. Okay, now trade payables, we are having 136,000. Trade payables 136,000. Okay, what else? Long-term loan 1,200,000. 100, 1, 2, 3. And this is not bank loan. This is long-term loan. Okay, this done, this done. Share capital opening balance 1,500,000. So 1,500, 1, 2, 3. And the closing figure will be same because there is no issue of shares. Share premium 800,000. 1, 2, 3, and this will remain same because there is no issue of shares. And then retained earning opening balance is what? 11,631,2,3,000. And there is no revaluation surplus. So we can check what's the profit figure there. So profit figure is a 2,640,000. 2,640,000. So if we put profit here, 2,640,123,000. So we can arrive at 1,500,000, 800,000, 3,413,000, 3,413,000. So 3,413,000. This is 3,413,000. Share capital is what? 1,500,000. Share premium is what? 800,000. This figure we need to calculate again. Equal to sum bracket start from here to there. 7,519,000, 7,519,000. Our balance sheet tally, yes. This is our profit and loss account, other comprehensive income. There is no revaluation surplus. Is it fine? And this is our balance sheet asset side. Non-current assets, inventory, cash and cash equivalent, trade receivables, prepayments, short-term investment, and then equity and liabilities, share capital, retained earnings, share premium, long-term loan, tax payable, interest payable, trade payables. And this is our statement of changes in equity. Share capital, share premium, revaluation surplus was not there. Even if you don't make this column, it's fine. And retained earning, opening balance minus dividend plus profit. Opening balance minus dividend plus profit. I think that's enough for the day. Enough. That's enough for the day. So we have covered chapter 1 complete. What you need to do, you need to solve these 3 questions by yourself at home once again. Before next class. In next class, we will start accounting standards. Now onward, there will be some new adjustments with this financial statement. After studying our standard, we will adding more adjustment. After studying our standard, we will adding more adjustments. And how those adjustments will be calculated, where their impact will be in the financial statements, we will learn. That's enough for today. See you again in next class.
Thank you.
Thank you, sir.
Thank you, sir.
Thank you. Our class is regular
Thank
on
you, sir.
every Wednesday. But if we need any extra class, that will be on Monday. And I will inform you before extra class. Our regular class is every Wednesday. During Ramadan, mean till 11th of April, our class timing is 2:30 to 5:30. But after 11th of April, our class timing will be 6 to 9. And in case we need to conduct any extra class for extra practice, that will be conducted on Monday. Because Monday is a reserved day for extra classes. So see you next Wednesday.
Thank you.